Hey, Saretsky here. Welcome back to the show. Lots to touch on. I got some updates for the Vancouver housing market, the Canadian real estate correction, what's happening in the Toronto pre-construction condo market, housing starts, and trade tariffs, because this is all going to shape the Canadian real estate markets this year. So it's been off to a very busy, volatile start to the new year. So lots to unpack in this video, but I had to start it off this week by saying, it's never going to be more important this year than many other years to really differentiate and really explain the differences in various market segments. Everybody's so used to painting the housing market with this broad stroke. We always talk about the Canadian housing market or, when you're talking about the Vancouver housing market. What depends? What do you have? What are you selling? What's the price point? Is it an end user product? Is it an investor end product? This is going to matter. This is going to be the key theme in 2025. What do you have and where is it? We're so used to the raging bull market where a rising tide lifts all boats. Doesn't matter what you own, where it is. It all goes up and to the right. That is not the case. It hasn't been the case the last 12 to 18 months, and that's going to continue to be the case. And it's going to be emphasized in 2025. So to start things off, broad strokes, the Vancouver real estate market start the year. It's only a couple weeks in. You can't take a huge amount away from it, but it's off to a good start. Showing activity is really strong. Things are moving. We're seeing some multiple offers happening. Sentiment is pretty good. People are re-entering the market, and that's really been the case for the last 4 or 5 months now. So that's a continuation of the trend. The Vancouver housing market looks just fine. Now, again, you look at the home price benchmark, right? You look at the home prices for Greater Vancouver as a whole. They haven't moved. They've been flat now, basically. Since December of 21 to December of 24, prices for more or less have been completely flat. So basically 3 years, no growth, some volatility in between. But overall, again, so many comments here in the YouTube section. Everyone's talking, everyone loves to immediately rush to, oh my God, housing crash, get in, get out, 30%, 40%, 60% drawdown. Guys, rates went from 0 to 5. Mortgage rates went from 1.5 to 6.5. And you've seen over the last 3 years a cumulative 0% increase, 0% decline. Yeah, and again, segments. There's segments that are being impacted. If you bought a luxury condo, a pre-sale in Vancouver at the top of the market in 2021, 2022, you're sitting on a sizable loss. If you bought into the Butterfly project at $3,000 a foot, you're going to lose $1 million. So these are the stories that you're hearing. If you bought a suburban townhouse in February of 2022 at the ultimate peak of the market and you competed with 8 other people and you outbid 8 people, you're going to be sitting on that townhouse probably for the next 6 to 10 years. Okay, so you're 3 years almost into that process. You got another 3 to 6 years left to go. That's probably the reality. So it's really important to make that distinction. Now, again, if you sort of zoom out, where are we on the national housing downturn or housing correction? Good chart here from BMO out this past week showing the Canadian housing corrections over time. And again, you'll see certain markets. Guys, the first house I ever bought in Calgary, I bought in 2019, just before the pandemic. The market, there's just no excitement at all. Bought it for the exact same price. I think it was actually a couple $1,000s less than what the person had bought it for in 2007. So from 2007 to 2019, there was no home price appreciation. And then, of course, over the last 2 to 3 years, the house has gone up probably 40 or 50%. So you go through periods of stagnation. We have that in Vancouver. You bought a house on the west side of Vancouver, detached in 2016. To today, there's pretty much been very little to no home price appreciation over the past 8 years. So again, really just depends what you bought, when you bought it. And so many focus on, oh my God, broad strokes, Canadian real estate, everything's coming down. And it really just depends. You cannot compare the inner city detached Calgary housing market to what's happening in the Toronto pre-construction market that is dragging down that entire index. That's where all the pain, the bankruptcies, the big losses, the things that are going to scar people for a decade or more is going to be the Toronto pre-construction market. That is where ground zero is. Ground zero is the Toronto pre-construction condo market. If you look at new construction home sales in the GTA, 28-year low. And I'm not saying it was a 28-year low for the month of December or November. It was for the entire calendar year. 12 months in 2024, it was the fewest number of home sales in 28 years for new construction in the GTA. And why? Why did that happen? Because 60 to 65, upwards of 70% of the pre-construction market is sold to investors. A lot of the times it's designed for investors, it's marketed to investors, and it's sold and purchased by investors. And so when the numbers changed, aka the rates went up, home prices stopped going up, they started coming down, and now rents are coming down, the math doesn't work for the investors, and so they've all scurried off, and there's no one left to buy these pre-construction condos at inflated values. And people say, well, the investors are part of the problem. Investors are just part of the market. The market was, when you lowered rates to zero and you penalized savers, people flooded into hard assets. They flooded into they made money free, and they flooded into pre-construction condos. Now, pre-construction condos, there's a reason they typically sell it to investors as well. Think about it, you're buying a high-rise condo, you're waiting 3 to 7 years for the product to deliver. Most end users aren't sitting around twiddling their thumbs for 5 years waiting to move in. They want to move in tomorrow. So that's kind of the dynamics of the pre-construction market. So I think it's really, really important as we start off this year to say, okay, there's a lot of variables that are happening right now. There's a lot of noise. Okay, when you read headlines, you've got, of course, you've got all these real estate brokerages and the national agency coming out and talking about, the recovery in home sales, and home prices should go up 3 to 4, 5, 6, 7% this year. Again, I don't believe in these broad stroke forecasts. There's so many variables that are at play today. What market are you in? What product are you buying? And let's talk about the trade war, because that's really the elephant in the room. How can you reasonably make any logical forecast today when we are staring down the barrel of tariffs from the United States? I mean, there's talking about 25% tariffs across the board. It could be 5%, it could be 10%, it could be 25%. What products is it on? How do we even evaluate these tariffs and the potential impact on the Canadian economy? But what I can tell you is the ramifications of these tariffs are potentially very, very significant. In fact, we had some interesting comments from Mélanie Joly, the Foreign Affairs Minister, just this week talking about the potential impact of tariffs on the Canadian economy. So let's clip to that right here.
Because we know that the impacts on Canadians would be really, really, really difficult. And why I'm saying that is we know that there would be lots of job loss across the country. And we know that this would also have an impact on cost of living for Canadians. I won't go into the details of what that figure is like, but definitely we have numbers that are highlighting how much this could be devastating. This would be basically starting a trade war. The Americans would be starting a trade war against us, and this would be the biggest trade war between Canada and US in decades. We've gone through a very difficult moment during COVID where we had to save many businesses and save a lot of livelihoods across the country. And so we have the experience of how we can address severe economic damage. At the same time, I think that there is still hope that if we use our levers well, that we can make sure that Americans backtrack. And that's why I've been saying everything is on the table, and we have to be able to show how much this will have an impact also on the other side of the border, which is job losses also in key states.
This lady is so scared to even talk about the potential numbers of how bad this could look. The reality is it could be very, very bad, and it could just be a complete nothing burger. It could be a lot of talk. It could be we put them on for a couple months, then we remove them to show that we're serious. Like, we just don't know how this is going to play out. So to start predicting where interest rates are going to go, where bond yields are going, just look at it over the last 3 weeks that we've been in this new year, is that bond yields are trading up or down 10 to 12 basis points a day. This is not normal activity for a sovereign debt market to have bond yields jumping, 10 plus or minus 10 basis points in a single day. But what we do know is the data and the analysis from National Bank shows that you could see a 6% reduction in GDP if you had a 25% tariff penalized across the board on Canadian goods. Now, again, that would be a significant drawdown. You would be in one of the most severe recessions in this country's recent history. Of course, we would see job loss that come along with that. So we just don't know. This is a real risk, though, of course, to the housing markets. And we start making forecasts and how long is it going to last? Is it going to get better? Is it going to go up? I mean, basically, we're pinning a lot of this market on right now today. Is the talk is not so much about, inflation like it was over the last 18 months. It's like, what's Trump going to do with the tariffs? How's that all going to play out? Who's negotiating? And that's going to influence bond yields, which of course price your mortgages. It's going to impact what the Bank of Canada does. If you get obviously more severe tariffs, job layoffs, of course they're going to have to cut interest rates further, hammer variable rate mortgages lower. But how do global markets price bond yields? Is it inflationary, disinflationary? There's so many nuances here. So what I say here to really summarize my thoughts is I would really just caution people that are watching this channel and reading headlines and forecasts about what to do and when to buy houses and just in going into this analysis paralysis. I mean, my recommendation today is buy when you can afford it, buy when it makes sense. If you've got comfort and peace of mind in your job, go out there, sell your house, buy your house. Like, people need to also get on with their lives. But this is the threats to the Canadian housing market, the threats to people's forecasts rely almost exclusively this year on tariffs and what that means to the Canadian economy. So again, I just zoomed out for everybody, showing that, and this is my own personal view. If you had asked me back in the early days, let's say of 2021, house prices were going up, and you had asked me, listen, the Bank of Canada is going to raise rates from 0 to 5. Your fixed rates are going to go from 1.5 upwards of 6.5%. Where do you think home prices will be 3 years from now? And I would have told you Vancouver house prices, I probably would have said they would be down 20+% if you took rates from there to there over a 3-year period. And as I just showed you, the benchmark is flat. It's flat, and it hasn't moved from December of 2021 to December of 2024. So I would say prices can't go further down from here, but to suggest, I think that would surprise a lot of people. It certainly would have surprised me. It still surprises me today. But this is the thing. These are hard to predict. Now, again, broad strokes, single family house on the east side of Vancouver, I would actually argue is higher today than in December 2021. Suburban condo townhouse is lower. It's probably about 10% lower. So, but when you put the whole index together, that index is flat over the last 3 years. So again, the key theme of this year is, number one, yes, it's tariffs, but number two, it's segmentation. So what is going to underperform this year is condos and investor style units. If you've got a property that caters to investors, caters to, maybe it's a small 1-bedroom condo, a junior 2-bed condo. Maybe it's a house that's chopped up into 3 suites that's rented out to long-term tenants. That is going to underperform. That is probably going to suck. That is probably not going to have a very good year. Where I think where on the flip side, it's all about end user product, where I see strength, entry-level single family, housing starts at 30-year lows. I think that the duplex market performs just fine. I think ground-oriented, where young families, where you do have the real demand, real local demand from end users, families that are looking for more space, working from home, needing a home office, having a kid, having some backyard space, that product is going to perform just fine. So those are my takeaways for this week. Ultimately, just watching what's happening with Trump tariffs. Again, he's inaugurated on January 20th. The Loonie Hour has been doing a lot of research and due diligence on this. We've had some good guests on about the implications of tariffs. We had Heather Exner-Perot, an energy specialist. We've got Danielle Smith, the Premier of Alberta, coming on in a couple weeks as well. So we're doing our best to sort of unpack this. I'm not going to sit here and pretend that I know what the outcome is going to be of this potential trade war, but we'll see. We'll see how it all shapes up. It's heavily important for the Canadian real estate market, the Vancouver real estate market that I operate in on a daily basis. So I'm very careful about extrapolating recent trends. It'll be another year of volatility. So as always, hope to help, and we'll see you next week.